This is today's Daily Market Comment at XM.com by Mario Sotiriakos. I'm Christina Marujos. The United States is teetering on the edge of a recession after the economy shrank for a second consecutive quarter, adding another headache for Federal Reserve officials in their fight against roaring inflation. Dissecting the GDP report, the silver lining was that much of this contraction boiled down to inventories being unwound and government spending rolling off. Consumers are still spending and exports have started to fire up, although the weakness in investment is a bad omen for what comes next. The Fed and White House have stressed this is not a real recession since we haven't seen businesses going bankrupt or any massive job losses. Nonetheless, the economy is stalling and it might be only a matter of time until the labor market shows cracks. The disappointing GDP reading sent shockwaves through global markets, with the price action in bonds and equities telling the same story. The end of the Fed's tightening cycle is approaching. Treasury yields fell across the curve, and Fed funds futures point to a lower terminal rate for interest rates, which are now expected to peak at around 3.25% in December. In classic fashion, bad news on the economy was good news for stock markets. The S&P 500 climbed 1.2%, and futures point to another round of gains today following some cheerful earnings from Amazon and Apple. The bar was set so low heading into this earnings season that companies are jumping over it without much effort, and investors are taking solace in the fact that the situation is not catastrophic. Over in the FX complex, the yen has come back to life, which is about to close the week with gains exceeding 2% against the US dollar. The Bank of Japan's refusal to even consider tighter policy and the loss of the nation's historical trade surplus as energy prices went ballistic were the two main forces that pummeled the yen this year. Now that growth is losing power and foreign central banks are expected to slow their own tightening plans, the yen has started to stand on its own feet with a little help from stable oil prices too. The dollar is set to close the week with some losses, but admittedly the retreat has been quite mild. Finally, with the wind coming out of the dollar sales and real 10-year Treasury yields getting cut in half this week alone, gold prices have received the green light to cruise higher. Thank you for watching the Daily Market Comment at XM.com. Have a great weekend.